San Francisco, 2015. Bitcoin was about $250. Across the city, young tech workers and crypto believers shared houses. They pooled resources. They lived cheap so they could buy more coins. They were broke. They were weird. They were absolutely convinced they were changing the world. Fast forward to today. Some of those early adopters became millionaires, some lost everything, and some just disappeared from the crypto world entirely. One man made a YouTube video telling people to buy $1 of Bitcoin. Many people dismissed the idea. Another bought 2 pizzas for 10,000 Bitcoin. Today, those pizzas would be worth hundreds of millions. This is the story of early Bitcoin. The believers, the spenders, the holders, and the fortune that slipped through most of their fingers. 2015 was a weird time for crypto. Bitcoin had crashed from over $1,000 to below $200. Many people declared it dead. Newspapers wrote obituaries. Your parents told you to stay away. But in cities like San Francisco, a small group of believers kept accumulating. They lived in communal houses. They shared rent. They spent their money on mining equipment and coins instead of nice furniture. Stories like these played out inside places such as the Crypto Castle, a communal crypto house in San Francisco. It was not a real castle. It was a crumbling building with cheap rent, but many residents believed cryptocurrency could change the financial system. They were not celebrities, they were not experts, they were just early. And in crypto, being early is everything. In 2015, buying Bitcoin was not cool, it was embarrassing. You had to go to sketchy websites, you had to store your coins on a USB drive. If you lost that drive, your money was gone forever. But a small group of believers kept buying. Some residents bought a few Bitcoin with the little money they had. They forgot about them for years. Others mined coins in their bedrooms. Their computers ran 24/7. Their roommates complained about the heat and the noise. Some early adopters spent their Bitcoin on everyday things: pizza, coffee, a used couch. They believed the technology would make money irrelevant. So why hold it? And some residents came and went. Not everyone stayed active in the crypto community. These were not famous people. They were just ordinary early adopters. Back in 2013, 2 years before the Crypto Castle became known, a YouTuber named DaVinci Jeremy uploaded a video. Bitcoin was $116. He said, buy $1 of Bitcoin, just $1. Hold it for 10 years. At the time, many people dismissed the idea. $1, really? The video attracted little attention at the time. Most people had never heard of Bitcoin. But DaVinci understood something that most people did not. Holding is the hardest part. Here is where the paths divided. Some early adopters could not stop watching the price. Every day they checked their phones, every hour, every minute. When Bitcoin dropped, they panicked. When it rose, they got greedy. They started trading, buying high, selling low, the classic beginner mistake. Some borrowed money to buy more. They were convinced Bitcoin would hit $100,000, but they could not hold. Others did the opposite. They stopped caring about price entirely. They used Bitcoin to buy things: pizza, coffee, a used couch. Every time they spent coins, they said the same thing: this is what money is for. At the time, a few Bitcoin bought a pizza. Today, those same coins would buy a house. The most famous example happened before most people even heard of Bitcoin. On May 22nd, 2010, a programmer named Laszlo Hanyecz was hungry. he went on a Bitcoin forum and posted an offer: 10,000 Bitcoin for 2 pizzas. Someone took the deal. Laszlo bought 2 Papa John's pizzas for 10,000 Bitcoin. At the time, Bitcoin was worth less than 1 cent. 10,000 Bitcoin was about $40. Today, those 2 pizzas would be worth hundreds of millions of dollars. Laszlo became known as the Bitcoin pizza guy. He says he does not regret it. He helped prove that Bitcoin could buy real things. But still, hundreds of millions of dollars for 2 pizzas. Then came the point of no return. Late 2017, Bitcoin went from $250 to nearly $20,000. Early adopters who held became rich on paper. Many traders ended up with less than the people who simply held. The ones who spent had pizza stains and regret, and some, no one knows what happened to them. They just stopped posting on forums. Some early Bitcoin wallets have remained dormant for years. Then came the crash. In 2018, Bitcoin dropped from $20,000 back to $3,000, 85% gone in a year. Many communal crypto houses changed over time as residents moved away, and the early Bitcoin era faded. Some early adopters lost everything. They had borrowed money to buy more. When the price crashed, many of them lost substantial amounts of money. They stopped answering calls from friends. Others had already spent their Bitcoin long before the crash. They had nothing to lose. They moved back to their hometowns, started small businesses. They do not talk about Bitcoin anymore. But some never sold. They held through the crash. They held through the panic. They held while their friends called them crazy. Some of the biggest winners were people who simply held and ignored the noise. In 2021, Bitcoin hit $60,000. Some former residents of communal crypto houses, people who bought a few Bitcoin years earlier and forgot about them, they logged into accounts they had not opened in years. There was money there, not millions for everyone, but for some, enough to change their lives. Some early miners became wealthy enough to buy homes outright. And for many early adopters who disappeared from online forums, nobody publicly knows whether they still hold their Bitcoin. Some early wallets have never moved. Here is the cruel irony. The people who became millionaires were not always the smartest, not always the loudest, not always the ones who believed the hardest. Some of them were just the ones who held and ignored the noise. Let us stop for a second. What does this story actually teach us? Lesson 1. Time in the market beats timing the market. Some early adopters tried to get rich fast. They watched the price every day. They traded, they borrowed. Many of them lost substantial amounts of money. Others did nothing. They bought and held. They became millionaires. The best investment strategy is often the most boring one. Lesson 2. Do not spend your future on pizza. Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoin. At the time it seemed harmless, a fair trade for a hungry programmer. Today, those 2 pizzas are worth hundreds of millions of dollars. Spend your cash. Hold your investments. Lesson 3. Some of the biggest winners were people who simply held and ignored the noise. You do not need to be an expert. You just need to stay in the game. The early Bitcoin era is gone. The early adopters scattered. But their mistakes and their wins are still lessons for anyone who wants to build wealth. Find something you believe in, buy a little, hold for years. Do not check the price every day. And whatever you do not be the guy who spent 10,000 Bitcoin on pizza. That is the story of early Bitcoin. The believers, the spenders, the holders, and the ones who disappeared. You do not have to be a genius to build wealth. You just have to hold longer than everyone else. Subscribe for more real money stories, wins, fails, and dumb luck. Real stories, real mistakes, real lessons. Do not be the pizza guy.